ladies and gentlemen. I'm Joseph Novichko, Senior Trading Manager with GDM. Welcome to today's webinar. It's Friday. It's time for our second session for this month. We're going to take a look at one more revised system, as I mentioned the last time. Speaking of the last time, on Wednesday we spoke about a scalping trading system which could also be used up to 30 minutes, that could transform into a swing trading system. Of course, it was a very nice session. I've received a lot of questions from you, especially for the system itself. I've seen already some of you have started to test the system at hand. Some positive reaction to it there was as well, and I'm really happy to see that what we do here is appreciated. Now today, however, ladies and gentlemen, we're going to talk about a counter trend trading system, which is a very nice system that could be combined with any particular trend trading system, or the scalping system that we spoke about the last time, which mostly focuses on directional trade. Right now, the instruments that we're going to use, first of all, we're going to start with the most important moving average. That's the 200, is an orientation of whether the price is far away or close to the price action at the moment. It's a key support and resistance area, as you can see here and here as well. That's why whatever counter trend measures you have been taken, whether with this system today or any other, the 200 exponential is a must to any platform or any chart. Now, the other instruments that we're going to use are, of course, familiar to everyone. Again, today we're going to use the average directional movement index with a few differences here, that we're only going to use the so-called ADX line, which means that the directional indexes we're going to replace with our foreground colors to only receive a one line, which is by far the most important one. However, speaking of which, we need to adjust our period. Today, instead of a period of 50, we're going to use a period of 14. It's much faster. It gives a little far more interesting details to the other instrument that we're going to use. Speaking of which, it's the relative strength index, which of course should be applied on top of the ADX, as I mentioned. The easiest way is to find it in the navigator bar. Just drag it on top of the ADX and apply the necessary parameters. Today we're going to use the period of 10 for the relative strength index, as well as the rest of indicators which are going to be used today. We're going to be talking about in the next few minutes. Right now, my levels here are really not necessary, but I'm going to leave them as just an indication of where the market is at any given point of time. This is how the ADX looks like with the relative strength index. I'm going to stretch it a little bit so we can better see what the market movement is, and most of all, the closest levels of the ADX and the relative strength index to the 0 and 100 levels on the bottom and above. Now, the other key instrument that we're going to use is also the Bollinger Bands. It's also a trend indicator, which of course we're going to use a period of 14, but then the deviation today is not going to be 3 but only 2, because we're focusing on the 66% of the time where the price closes and opens within the Bollinger Bands. Now, it's very important to notice at this stage here, where the price on high volume is touching the lower base of the Bollinger Bands and immediately opens within, but of course the deviation between the ADX and relative strength index is far from each other, which means the counter trend measures that we can take are to the moving average, which is of course period of 14. The slower you make the moving average, the very few signals you might be able to get, or the distance in pip size is also going to be smaller. 14 corresponds with the ADX 14, with the Bollinger Band 14, the moving average as well, and it could give us a very good overview of what the market is up to. Now, it's very important when we're taking this particular measures here to take profit immediately. Now, the last time we spoke about the scalping system, which allowed us to take this particular movement, which is roughly 20 pips. That's $200 in about 11 sessions, given the fact that we're trading the euro versus the dollar with a very tight spread down to 1 pip on a 5-minute chart, and it gives us very fast profits in roughly 50 to 55 minutes. And within the next 4 sessions or 20 minutes in time, we're getting another $50 of profit before the market actually confirms for another move down or to the sideways direction. Now, the fact that we're using this system, and it's been adjusted because the last time when we've been using the relative strength index to correspond with period of 14, which was of course the ADX with the same period, very few signals were actually been confirmed and used during the trading time. But when we are using a period of 10, you will see when we start backtracking this particular way of trading in the future how a better divided way, like is this one here, you can see the distance between the relative strength index and the ADX, which is far up to the final levels up there, and of course down to 0, close to 0. As close you can get to the 0 and 100, the better. Now, let's have a look at another case scenario like this one, which is this case here. As you can see at the chaotic movement of the ADX with the relative strength index, that's why this system is so precise, because when we have the deviation between both indicators down here, and of course we see that the market is closing within or outside of the Bollinger Bands with deviation of 2, we can take countermeasures within 5 sessions. That's 25 minutes, another $70 of profit into our accounts, given the fact that we have already exhausted this down movement with the previous session that we spoke about on Wednesday. And also another case scenario here, you can see it's pretty much the same, another $300 of profit here as well, also very tight profit of $300, and this one here, which gives us another profit of $300 to $400 in about a few sessions. Now, this is also a scalper system, but it always focuses only on the counter trend, only on the retracements. You can't really use it in a directional mode because the indicators would actually go within one direction, and the confusion within a trade could be great. You can see the direction here. It stands to as far as it could go up there, about 7 and 8 pips, and then it ends up in a sideways direction only to switch sides eventually, which of course in the long run we cannot benefit from such development of our indicators. But it's very clear. Let me show you here the way that the both indicators occur. This one, and when we start moving backwards, you will see how they will pop up to be out of our levels that were preset as close to 0 and 100 of both indicators. The deviation here should be the largest as possible. Of course, it should not be within the boundaries of level 70 and 30 of the relative strength index, which is of course our main rule. If we're going to use that system accordingly and correctly, we should always use it outside of these boundaries. And here, of course, we have the same case scenario, about 7 or 8 pips, that's $700 to $800 of profit into our accounts. Also, when I mentioned we should not use it within the boundaries of this, is basically because the move is not over. You can see how tight 1 to 2 pips of direction, and then the market bounces off from the moving average and goes back down. That's why we only pick opportunities on retracements where we have a significant distance between these two, and it should be always used within outside of the boundaries. Despite the fact that one of it is outside and one of it is inside, is also a breach of the so-called regulations of this system. And another case scenario, when both of them are outside of it, you can see the bounce to the upside, $600 of profit again. When we go here, is the same $800 of profit. Here again, another $400 to $500 of profit when we start moving backwards. This case scenario could also be valid, $500 of profit, and so on and so forth. But you can see clearly that the deviation is larger as possible. That means the move to the opposite direction could be as bigger as it could be. That's another $700 of profit. You see, this one is just an exception, which means that sometimes you would get a good retracement or a good counter trend, but you should not take that moment here, because in more cases that we keep going forward, it could actually either end to a sideways direction or continue to the reverse direction of our trade. Here is another case scenario here and here. We have roughly to the moving average about $500 of profit here on one lot, as I have to mention one more time. This is also another case scenario here, another $800 of profit here with these 8 pips of upward direction. And also, even in this case here, we still have now $400 of profit. Even if I keep going backwards, ladies and gentlemen, we can still find the same case scenarios that could prove the theory to be accurate. Another $800 of profit. Now let's have a look at another system. Sorry, not another system, but at least another instrument, so we can confirm the validity of the system itself. And I'm going to save this as a template. I'm going to go for a counter trend, so I can find it easily the next time I apply it on a different clean sheet chart, like this one here. There it is. We have it now. And of course, it's preset to a 5-minute chart when you remember the template itself. Here it is, a case scenario where the system is it cannot be used. Basically, what we're seeing right now is only retracements from bearish trends, based on the fact that we had a lot of decline on the 5-minute chart, especially within the next past days. As we see here, this is also a valid point to enter. This is roughly around 90 cents. 90 cents, that's almost $1, or 90 cents, or that's about $90 of profit here on this case, or with one lot it could correspond to the aforementioned number of profit. Now here, of course, is one of the exceptions when we said that when the price is close to the 200 exponential moving average, we could either see a bounce off to the upside, or we can see a very strong move down below. So some of these cases could also be taken under consideration. Now we have another $700 of profit here. Also on the counter trend, so far here we have a very few opportunities. This is also an opportunity you can take. However, I wouldn't go for it based on the fact that what we see is a strong upward direction with both indicators moving to the upside, which means that we cannot rely on such a signal. Also, given the fact that gold is one of the most volatile instruments out there, we should always be mindful and careful when we trade on the counter trend of the system, basically because the volatility can bring the gold price, we can see here, is also about $120 of profit on this one. We can see that the market is pushing the price straight forward down after the bounce off. And that's why when we pick our counter trend strategy, like this one, for example, we should always try to find the best possible time frame, whether it's 5 minutes or 15 minute. It really depends on the time frame that we're trading at. The time frame that we're trading at is deeply dependent on the day and the time that we're trading it. Basically, if we have a case scenario, just a second, let me find one, like this one here, for example, which is also valid. You can see the sharp moves up from both sides of the levels here. We have another $100 of profit here. Also, this case scenario, you see these sharp moves. We have another roughly calculated $130 of profit here. Let me see here. This is also a sharp move. We have another $60 of profit here. And that's only on one lot, as I mentioned earlier. This is also a valid trade. Also, we have another $60 of profit here. What I'm trying to say, ladies and gentlemen, is that this system roughly corresponds with the candlestick formations or chart patterns or any other that could actually deliver a good profit into our accounts. Now, this case scenario here delivers 90 pips of profit, but the moving average was far away to take that profit, and it's roughly on a flat or just about $10 of profit. The chart is getting really floppy here, so I'm going to try to check another currency pair. Let's go for the British pound versus the dollar. Let's go for our template, the counter trend, so we can have a look at what we've got at this stage. There is a valid signal here. There you go. Another 36 of profit, 36 pips of profit, or $360 here, or in this case scenario as well, another $300 here. Roughly said, the system could be used and incorporated in another $400 to $500 here in any system that is up to your choosing, or trading plan that could be sustained in the long run, or the previous trading strategy that we spoke about. That's the scalping trading system that could also transform depending on the this is also 1 hour chart, as you can see. It's one thing that proves that the system could be used in the various time frames. It's not only 5 minute chart, but it can be used on all time frames, because retracements could occur in any chart time frame. There you go, another $400 of profit, roughly up to 500, especially on the 1 hour chart. The retracement is much larger. You can see the upward direction of both indicators with the sharp moves to on the British pound versus the dollar. That was, if I'm not mistaken, in January. So you can see as further back as we go, the system can prove to be pretty brilliant, to put it this way. There you go, another $300 on the 1 hour chart. We have another case scenario here, multiple options for entry. I'm sorry, I have some kind of a flu or something. My nose is getting tricky at this stage of the day. So basically what I was saying is that it doesn't really matter what time frame you're using on this system. It really means that it could be valid for all types of trades. However, it's very tricky to use it around the 200 exponential. It could either sharply move to the downside without even giving the necessary move to the upside. In this case, you have that retracement that is close to $3,000 to $3,500. Also here you have the same case scenario up to the moving average here, another $300 of profit. So even if we keep back testing this, this is from last year, moving to October. Also, this is when actually the vote was on the referendum. You can see the retracement was very enormous. This is about $1,444 of profit, but there you go. This is a case scenario that can always be very tricky, because in this case the market could get in oversold conditions, but then from a fundamental side it could continue for a very long time and just stretch the boundaries further away. So in these moments, we can always just sit back, relax, until we can always trust the technical trading. There you go, $300 of profit. Another case scenario here, you have another $400 of profit. So I think you got the picture. It's enough for now with three different instruments, 2 currency pairs, 1 volatile commodity, and of course the result is always the same. We went back to October on the British pound, and we saw how well the counter trend system is performing. Of course, it's always up to the traders, to the individual traders' ability to incorporate this particular way of trading to his own trading plan. So please don't get me wrong, it's a very nice system, but it could be it could prove treacherous for the faint at heart if you don't have the let's say the nerve to enter and exit quickly, especially when you're using 5-minute charts or 15-minute charts, because these retracements, especially on volatile times of the day, they could occur very fast, and you might miss the opportunity to collect the profits at hand. So it's a system that could be used in any means or in any plan, depending of course on what kind of system preliminary you're focusing on. It suits the scalping trading system very well, because along with it you can have this one with it. I'm talking about the scalping trading system that we spoke about on Wednesday this week. This specific counter trend system could be incorporated with it, because you can quickly enter and exit within the 1 day to make at least 20-30 positions possibly. It really depends again on the market conditions and how volatile the market is. Basically, because if it's a slow market, slow day with little participation of traders around the world, we can actually see a sideways direction, and we might need to focus on, let's say, more volatile pairs like the US dollar versus the Swiss franc, for example. You can see right away, 1 hour chart, you have another $300 of profit here. Even if I have to move this one to center it out here, we have another $250. So you see, multiple time frames, multiple different currency pairs and commodities. It's always valid. It works well. It's always up to you whether you can sustain 1 full trading day to lose, and of course it always depends on your eyesight and of course on your brain capability to sustain such pressure. Therefore, it's not for the faint at heart. Please understand that you have to be very quick in and out of the market, especially when we call it on a retracement of a trend. That's all about it. Nothing complicated, ladies and gentlemen. And of course, let me remind you that the next time or next week, we're going to be talking about binary options, 2 or more, depending on the time that we have at our hands, 2 or more advanced binary options trading systems. They're pretty simple and well to understand, of course, from most of the traders as I have within my reach. They've been performing pretty well with those systems that we're going to be talking about next week. And of course, I will present it in a webinar for you, absolutely for free. Of course, if you have any questions, the contact details are still the same. Go to our website, GDMFX.com. You will find on the bottom right corner a pop-up chat where all of your questions will be answered. And if you want to contact us straight away, you can find our telephone numbers over there in the contact details. And of course, if you want to send us an email at webinar@gdmfx.com. That's all from me for today. Thank you very much for joining me. And of course, I'm going to see you again next week. Thank you for now. See you then. Bye-bye.